All right, guys, and I am back. Oh my gosh, I scraped my foot. And I am back, guys. Okay, so if you're just tuning in, we're going to be talking about year end, what you guys need to be doing to prepare for 2024, some tax strategies and some few things. So if you know of someone that will be interested in this type of content and you tell them Folasade is live, please share the video, guys. Okay, so first things first, guys, let me go ahead on and share my screen. As a business owner, there are certain things that you guys should be doing. So if you are looking at my screen right now, you're probably seeing a document that says bookkeeping, right? And I know a lot of you like, holy cow, Falashade, I don't have no bookkeeping. So this is like the little year-end checklist that we send to our bookkeeping clients, and I will not give you guys all of this, but I'm just going to go through this briefly so you guys can know exactly on the financial side what you guys need to be doing, okay? All righty, so first things first, if you are a business owner, please, you need to start accumulating all of your expenses and all of your income. That is the concept here of bookkeeping. Bookkeeping is the accumulation of all of your income and all of your expenses. So if you're not doing that right now in your business, you're doing yourself a disservice. So the first thing that you guys need to do is at least at a minimum, start to collect all of your income and start calculating all of your expenses, okay? So the second thing you guys need to do, if you have an accountant and if you are my client, year end is here. I need all of my documents. I need all of my outstanding requests. If your accountant has been requesting your bank statements and all of your documents, guys, we need it. How are we going to close out your books? And when I say close out your books, meaning do the last few transactions so we can move to the next month. How are we going to close out your books if you're not giving us all of our outstanding requests? So first things first, guys, make sure you accumulate all of your expenses. The second thing you guys need to do is make sure you talk with your accountant if you have one. That's what I'm talking to right now, and make sure you give them all of your outstanding requests. Okay. The second thing that you guys need to do, if you are a service-based business, if you are a product-based business, and you sell products on Etsy, products on Shopify, wherever you sell it at, whatever platform, right? This is the time, guys, you need to be doing year-end inventory. Yes, you need to be counting how much products do you have left on hand. So let's say, for example, you sell bonnets, okay? If you sell bonnets, right now it's December 5th, so you don't have to do your calculations now, but if you want to start a little early, you can. But what you would do is go and count how many do you have left in stock if you don't have a automatic accounting system or using a software to track it. So if you're not using a software to track your inventory, guys, you have to have year-end inventory calculated. I see so many new small business owners fall short with this. You guys sell these products. Excuse me, guys. You guys sell these products, and then you come to me, oh, yeah, Flashday, I need to file my taxes. And you don't have nothing involving your cost of goods sold. So, your cost of goods sold consists of the inventory that you purchased, the product that you purchased, the boxes, the labels, and basically anything that is required to get your product to your customer. Okay. That is considered your cost of goods sold. So right now, if you sell a product, you need to be calculating what is your ending inventory. So when I file your taxes, right, I can come up with the correct amount for your cost of goods sold. From my professional experience, the IRS has increased audits with individuals that sell products because you guys are not calculating the cost of goods correctly on your return. A lot of you are only giving us the amount that you purchased. That doesn't work. A lot of you are just giving us the beginning inventory. That doesn't work. A lot of you guys are just giving us the ending inventory. That don't work. We need all of them. Beginning inventory, your purchases, and your ending inventory. Okay. The IRS have beefed up audits. And guys, can I give you some details? One of my clients was an actual IRS employee. and they ended up getting audited, and I had to represent them against the IRS, okay? And they dug heavily into their cost of goods sold, okay? So if you're a product-based business, please make sure you're calculating your beginning inventory, which you should have done already, your purchases, and then last but not least, the amount of inventory that you have on hand as of December 31st. Okay. So, guys, here's one of these technical conversations we're having. Remember, I told you guys, I can't come on here all the time and pop my stuff and have fun all the time. We actually have to talk about some technical things so I can help you guys further catapult your business and make sure you guys are doing things right. Yeah, we're going to have fun, but not now. Hey, Leo. But not now, guys. We're going to have a little bit of fun later on throughout the show. But right now, I really need us to put our business hat on, okay? I need us to put our business hat on, and so we can do things right. Remember, guys, they are increasing audits. I'm seeing it. My staff is seeing it. We're getting so many requests for audits, and IRS is beefing up their collections. So with that being said, it's time for us to tighten up things. Guys, I've been begging for years now. It's here. Okay. Let me go back to my year-end sheet. Alrighty. So we talked about the inventory. Okay. Okay. So another thing you guys need to do is make sure at the end of the year, you are actually accumulating all of your documentation, all of your 1099s, all of your W-2s. And if you purchase my book, Audit Proof, okay, 11 steps to write off everything. If you've invested in my book, you would know why you want to make sure you have all of your pay stubs and all of your W-2s and all of your 1099s. If you didn't purchase Audit Proof, then you don't know why it's imperative for you guys to keep those intricate records. So invest in Audit Proof, head over to Amazon, purchase the book. When you get to that part, you're going to be like, oh my God, Folasade, these people are crooks. You're going to be so surprised. But it's in your best interest, guys, to make sure you keep up with your pay stubs, make sure you keep up with your W-2s, and then also, if you are a business owner of any sort, sell any product or any service, you want to make sure that you go and accumulate all of your 1099s from all of the merchants that you sold products and services on. So merchants, when I say merchants, guys, that's Stripe, that's PayPal, that's Square, that can be Zelle, that can be Vimo, that can be Cash App. Look, we got so many options, guys. It can be authorized.net. It can be your bank's merchant. Whatever your merchant is, make sure you get every, okay, not just one, not the two, every 1099 from your banks, guys. And then, like I said, if you purchase my book, you're going to know why you want to make sure you have all your records and stuff, guys. These folks shady for real, like shady, 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 okay? Alrighty, so you guys going to get your 1099s and your W-2s, and then if you and then also your pay stubs. Don't just collect just the W-2. Make sure you have at least your year-end pay stub, okay? Alrighty. And then last but not least, guys, and what I'm going to end up showing you here, I'm just going to show you briefly on the thing that we send our clients at the end of the year. We have like a little tax strategy section on the sheet. And it basically just shows them a few tax strategies according to the structure of their business. Okay. So as you can see here, it says sole proprietors. If you operate your business from your home and do not have another office, please proceed to calculate your total household expenses, because then they're able to possibly take the business use of home deduction. So right now with this year-end stuff, guys, as a business owner and an individual, you need to do the following things. But if I were you, I will also head over to my link tree and invest into my 101 tax deductions. It's $5. Here's why. I want you guys to go through this and check off every tax strategy that is listed here that is pertaining to you. Okay. So for example, I say here are 3 of the only few tax credits for small businesses. Here's the work opportunity and welfare to work programs, and then some more. So if you have employees and you've hired them, you may qualify for the work opportunity credit. Okay. So I advise you guys go down through my 101 tax deductions and highlight every tax strategy that may benefit you. Okay. So like right here, I say most businesses miss the section 179 and or just supposed to say bonus depreciation. The majority of you have bought computers. You guys have purchased cars. You guys have purchased equipment and things like that. Or what is this? Content creator equipment and things like that. You guys can go ahead on and do depreciation for those equipments and things that you guys purchased. Okay. So if I were you, before the end of the year, make sure you go down my 101 tax deduction sheet, guys, because you're going to realize that the majority of you have been missing out. And guys, this is not the final version. This is one of the ones, my team have it on the site, and I don't function behind the scene. So I just come up with what I want to talk about and I search it and I just take whatever that they have available that I can see. But this is not the paid version that you guys get. So you're seeing a little bit of grammatical errors in this. This is just one of the preliminary ones before we have officially updated. Okay. So like, for example, it says here, Roth IRA contribution is not tax deductible, right? But an IRA contribution can be tax deductible. Okay. So if you have a retirement account that's a Roth and you want to get a tax deductible contribution, then then you wouldn't contribute into your Roth this year. You would contribute into your TSP or your 401k. So guys, this is the time of the year where it's time for you guys to really start to look at the true picture of your finances. Okay. So you want to do that. And if you guys saw my screen as well, it also says to get a separate bank account. Many of you are operating these businesses like it's a hobby. Okay. And remember, in one of my videos that I recently did, when I talked about hobbies and things, those were one of the defining factors. Are you operating that business like it's a business, or are you operating it like a hobby and not having a bank account and not having your bookkeeping and not having everything in order, guys? This is the time where you have to make sure you have everything in order. The IRS is tightening up. They just recently sued somebody for $14,000. I'm like, oh, IRS, you're spending somebody's salary. I had to charge up the computer, guys. You're spending somebody's salary for the year to fight $14,000 that's owed. So if the IRS is willing to go after somebody for $14,000, you don't think they're going to audit more people? You don't think that they're going to make requests to see whether or not you're doing things right? You don't think that they're going to scrutinize your tax returns this time of the year? I mean, next year? They are. Okay. And then last but not least, guys, if you would have invested into my 101 tax deductions, right, you would see that this is also the time for you guys to do your last minute charitable contribution. Okay. Some of you have old clothes around the house. Some of you have extra coins. Some of you have money in a retirement account or something, and you want to be charitable, right? This is the time for you guys to also give to your charitable organization. However, I personally don't recommend you guys just blindly go and give the charitable donation unless you're doing it from the bottom of your heart. Do it blindly, right? But if you're not doing the charitable contribution from your heart, well, let's say it's from your heart. If you are doing the charitable contribution from your heart, but you also want to make sure you get a tax deduction for it, you need to pull out your tax return from prior year and see if you qualify for itemized deductions. And remember, your itemized deductions are the following: your mortgage insurance, your property taxes, your state taxes that you paid in your W-2, okay? And then your registration fees, your medical expenses, okay? And then if you've done any charitable work, your charitable contributions. However, some of you don't own a home. Some of you don't contribute enough to charity to be able to qualify for an itemized deduction. So the last thing that I want you guys to do is to go and contribute $5,000 to your church, hoping, because I've seen this happen, guys. This is why tax planning is so important. hoping that you will be able to write it off on your taxes. And then guess what? You go file your return and we can't even write it off. Well, it's not beneficial for us to write it off. Okay. So check out my 101 tax deductions. So you can go through that as well. So you can maximize your tax deductions for the upcoming tax year. So put one in the chat if you guys got everything that I put down in this segment regarding what you guys should be doing for year end regarding your finances in particular. Not goal setting and all of that stuff. We haven't gotten there yet. What we need to be doing with the paperwork. If you understand, put one in the chat. If you don't understand, please put your comment there so I can make sure that we're all clear and you guys have the clarity that you need. Okay, put one in the chat if you get it. You got what I put down. And if you don't put one in the chat and you're confused, just post your question. Okay, and I'll try to answer your question. Okay, all righty. So number one, make sure that you invest in my 101 tax deduction so you can make sure that you know what you can write off. You want to make sure that you're accumulating all of your business income and your expenses. You want to make sure that you've calculated your ending inventory and beginning inventory and have all of your purchases accumulated. You also want to make sure you have your last pay stub, a copy of your W-2, and all of the 1099s that you will receive, okay? And then last but not least, make your last minute charitable contributions and your last minute retirement account contributions, okay? Your 401k and your TSP, your 405B, all of those things are pre-tax. So you get a deduction, a tax deduction for that, okay? It reduces your taxable income. And then also, depending on your total income, you may qualify for the saver's credit, right? But if you have a Roth, you are contributing the amount into your retirement account after taxes, right? So you don't get a tax deduction for that, okay? So just know it's a strategy behind it all. And you want to make sure this is why you have your own financial professional to assist you guys with this. So like prime example, a few of my clients now that are business owners, they're sending me, that's not my bookkeeping clients, they're sending me their income and their expenses so I can see where they stand this upcoming tax year. Are they going to owe? And if they are going to owe, what we attempt to do is try to get them to make their last minute estimated tax payment. Okay. So guys, this is really the time for us to tighten up. We've been able to procrastinate and BS all throughout the year. It's time is here. The end of the year, time we run short, okay? All righty. So we talked about what you guys need to be doing on the finance side. And I'm going to take a little quick break because I need to shift from these documents. Let me see if there's one more thing on here that I want to tell you guys for year end. Okay, yes, one more thing. If you guys have an S Corp, if you guys has an S Corp, listen to me. All of these social media content creators, I'm one of them, but I ain't one of them that told you guys this. They forgot to tell you that as an S Corp, you are supposed to pay yourself a reasonable compensation on W-2. So if you are an S Corp and you have not paid yourself yet throughout the year on a W-2, guys, this is the time where you need to go ahead on and process that last year-end check. Okay, so you can pay your portion of Social Security and Medicare taxes and whatever federal and state taxes that may come out. So if you are an S Corp, please make sure you process your year-end last check. Or if you haven't processed the check for yourself as a business person yet, or as the business owner, you have to put yourself on payroll. Remember, S Corps have to have payroll. Do not be deceived that you don't pay taxes. You will pay taxes through your W-2, okay? And then also, if you are a partnership, a lot of partnerships are not paying their general partners correctly. I'm seeing your partnership agreement say you guys will get guaranteed payments, but when you file the tax returns, you don't have any guaranteed payments. So guaranteed payments is a tax deduction for your partnership. So pay yourself your guaranteed payment, especially if it's in your contract. If you are not paying yourself a guaranteed payment and it's in your partnership agreement, you've already failed. Okay? Okay, hopefully you guys got that. Remember, this is a bit technical right now. Okay? All right, guys, so I'm going to take one little minute break just so I can shift over, right? And then I'm going to stop this Instagram. And then I'm going to go to my next topic, which is goal setting. Well, no, let me show you this thing on Instagram really quick that I want to show you guys. Because I think what I'm realizing is that a lot of us are not taking things serious. Let me see if I can find it. Give me 1 second, guys. Just give me some grace. Let me see. I hate when I'm searching online. It's better on the phone. Okay, yeah. Okay, so I'm about to show you guys this video really quick. Okay, let me share my screen. And then let me put my fair use clause at the bottom, guys. Just give me a second. All right. All right.
As us old, poor people are just so used to this lifestyle, I want to welcome you in open arms. I want to let you know that there's no judgment here.
Okay, let me refresh it.
Welcome to all the new poor people out there, and thank the economy and the corporations and the government. But as us old, poor people are just so used to this lifestyle, I want to welcome you in open arms. I want to let you know that there's no judgment here. Old poor, new poor, we are all one. Here are a few tips to help you navigate your new life. Print out your bank account statements, go through every single line item. You're going to stop spending stuff on garbage. It's up to you to choose what garbage is. You're going to make humongous meals, big ones. Maybe you're going to take all Sunday and cook, and then you're going to freeze them, and you're going to eat them. You're going to take what you have and make it work for you. We have a wood stove. We dry clothes by it. You're going to watch what you spend your money on. You're going to learn how to do things like cook and sew so that when your clothes get holes in them, you don't have to throw them away and buy new ones. You just repair them. Instead of trying to find amazing things to do outside of the home, you're going to find amazing things to do inside of the home. Like start a family band. You will throw nothing away. What I'm trying to say is you don't have to spend money to be happy or cool. Being old poor is kind of like a badge of honor, and I'm so happy to share it with you guys. Being new poor is going to be uncomfortable, but I promise you, I'm here for you.
Okay, guys. Okay, so she was being a little bit funny, but to be honest with you guys, where we are hitting in terms of our economic system and the inflation and everything is just so expensive, we're actually getting close to the point where people are having to choose what's important. Instead of getting the Hanes briefs, you're now getting the Walmart version. Instead of getting the organic 2% milk, now you're getting the regular 2% milk. You know what I mean? So people are having to really evaluate their spending and cut back. And a lot of you are just stuck in a bubble and not understanding what's really happening. I also saw another TikTok where the nurse, I think I saved it. Let me see if I saved it. Where the nurse was like, "Oh, after I paid all my bills, after I did all of this, I had 200 and something dollars left." I was so disappointed because a lot of the Black people were like, "Yeah, that's my normal life. Yeah, yeah, you're not broke, but, you know." And honestly, guys, no one, I mean, no one, okay, should be completely broke and having to survive off $200 to until their next paycheck. No one. So I know in the Black community, we have gotten comfortable because we've always been in survival mode. We've always had less than. But I personally do not want you guys to succumb to that mindset that that's all we're good for is just living under the rock, pinching pennies and being stressed and underpaid and not being able to live a free life, guys. We are here because one, our government has made bad choices, but we've also allowed them to make bad choices. But independently, we all have also made very bad financial choices. And so what we need to do is accept accountability as the accountability accountant, that's really the only way to really move forward with your finances. You have to accept the mistakes that you made. If you overspent, if you blew your budget, if you just didn't do things, it's time for to admit it and move on. And then now say, what could I do to prevent myself from being in that same predicament again? And if you look, so let me give you an example. Over like the past maybe 3 weeks, let me be honest now. Let's say maybe for the past 2 months, I've been eating out. And I told myself yesterday that that's it. So I'm like I'm like a buffet girl. I'm not the Ruth Chris type of girl. I can go to all of those places. I can afford to go all of those places, but I just like to eat, right? I like good food. I don't need ambiance and all of those things. I'm just an eater. I'm just a regular girl, right? And so I took myself out to the buffet yesterday to eat, and then I said, you know what? I'm not going to keep spending, because I realized the day before that I spent on some chicken wings. The day before that I spent on KFC. And I'm like, no, Folasade, you got to start cutting back. And here's why. That $20, that $30, that $40, that $50 does add up. But guess what society is giving us the excuse? Society is saying, oh, well, it costs just as much to cook in the home as to eat out. That's what everybody is saying. And now, honestly, I'm seeing it's true. But let me explain something to you guys before I go to the next topic and take my little break, right? If we all stop cooking, then they're really going to manipulate our food. I'm gonna say that again. If all of us stop cooking and stop buying groceries and cooking in the house, then the government really have a way to manipulate our food. We already have this GMO food, this GMO chicken and all of this stuff. You got seedless, every type of fruit now. If we all get comfortable with this, oh, it costs just as much to eat out, it costs just as much to eat in a house as it does to eat out mindset, then eventually, maybe a year, 2, 3, maybe 5 years from today, you will realize we would never have good quality food. So be mindful of these definitive type of social acceptance that we're in. The more and more we keep accepting what they're giving us, that this is the norm, they're going to end up now forcing this on us. And I want organic food. I want my kids to eat healthy. I don't, my kids don't eat out a lot. They're only allowed to eat out once a week. That's it. And then they don't always eat out that once a week. And then I'll tell them, oh, hey guys, you didn't even eat out. And my kids prefer my food anyway. And so that's my blessing. But let's not get comfortable with that mindset that they want us to have, that it costs as much to cook as it does to eat out, because they're going to start manipulating our food as well. I promise you they will. They're already doing it now. Okay. So guys, what I'm going to do, I'm going to take a quick little break. And then we're going to talk about goal setting, preparing for 2024, and rocking this thing on out, guys, because even as scared as I am, I'm a little fearful. I have to be honest. I don't know what to expect for 2024. It's been so much uncertainty, but I give God the grace and the glory, because, we could be in a worse situation. But I'm a bit concerned. And so with that being said, we still got to set goals. We still have to move life as usual. But am I the only one feeling like this? Like, even if we set goals, we may not achieve it because there's so much happening that's not in our control. Like, am I the only one? I don't know. But we're going to talk about that when we come back, guys. I'm going to take a quick little break. I'll be right back.